All the buzz is around the investing world's green corner that was once considered niche: stocks, bonds, and other assets with a focus on environmental, social, and governance (ESG) factors, in addition to traditional fundamental analysis. Vanguard Group's latest steps prove that the hive mind has come around to ESG. The second largest U.S. shop of exchange-traded funds on Wednesday made regulatory filings to launch 2 green ETFs. The Vanguard ESG U.S. stock ETF will track the FTSE US All Cap Choice Index, and the Vanguard ESG International Stock ETF will track the FTSE Global All Cap ex-US Choice Index. Both indexes are weighted by market cap and have constituents that include large, mid and small caps. In addition, the indexes exclude companies that have operations in the usual suspects: adult entertainment, alcohol, tobacco, weapons, fossil fuels, gambling, and nuclear power. The index methodology also screens out companies that do not meet ESG criteria as defined by the principles in the United Nations Global Compact. Those 2 ETFs are expected to start trading in September, bolstering Vanguard's lineup of one existing ESG fund. The $4.4 billion Vanguard FTSE Social Index Fund Investor Fund (VFTSX) has beaten the S. The adoption of ESG investing has accelerated in recent years, and more investors are looking for opportunities to align their investment choices with their values, said John Claiborne, head of Vanguard's Portfolio Review Group, in a press release. Historically, Claiborne told Barron's by phone, "We've been cautious because ESG investing has been fraught with challenges, definitional issues. What issues address the concerns of a large population, but investors are increasingly looking for options, and they aren't going to be harmed by these products. These screens account for commonly cited issues while still providing exposure that will get reasonably close to broad market returns." For our ESG primer, which was published in the Barron's special issue this week, these 2 new ETFs appear to be a mix of best-in-class, exclusionary, and standards-based approaches. ESG investing has gone mainstream, with the broadest survey showing some $23 trillion in assets invested along those lines, with ESG funds collectively holding some $108 billion, according to a J.P. Morgan Chase report published in April. That was apparent even before the firm called it. Goldman Sachs partnered earlier this month with Just Capital to launch its own ESG ETF, the Goldman Sachs Just U.S. Large Cap Equity ETF Just, which has gathered more than $250 million in assets in the last couple of weeks. Not to mention Larry Fink, chief executive of BlackRock, the world's largest asset manager, challenged companies in his annual letter published February to contribute to society. Vanguard's contribution here appears to be, of course, the Vanguard effect, that is, undercutting rivals with low fees. The estimated expense ratios for new ETFs are 0.12% and 0.15%, respectively. That's much lower than the 0.25% fee charged by the biggest ESG ETF by assets, iShares MSCI KLD 400 Social, and the 0.20% fee charged by Goldman's ETF. Sign up to review